Hey traders, welcome back. It is Monday, March 30th, and I got something a little different for you today. So I got good news and I got bad news. So the bad news is that I tried to start making my brand new course, which is focused on small account traders. So I'm limiting myself to less than $1,000 for the week, like in my account. So basically thinking about it as if theoretically, if I only had $1,000 in the account, how would I trade from Monday to Friday? So that's the next course that I'm going to make. And I attempted to start that today. So the bad news is that in the middle of doing the recording today, my laptop ran out of hard drive space. So I got to record for like 30 minutes and then it just stopped. And it told me that I had run out of space and I need to delete a whole bunch of stuff before I can actually continue and record more. So, that, and also the fact that this Friday is Good Friday and the stock market's going to be closed, I'm just going to postpone the course until next week. I'm going to make this course next week. So that's the bad news. But the good news is that I'm actually going to let you guys see the first half hour of the day today. I'm just going to upload it and let you see what happened as kind of a teaser to what you can expect for the course. So when the final version of the course does get recorded, it's going to be, very similar in style and approach and whatnot to what I did this morning. Because it's, just basically going to be me doing my normal trading day to day once the market opens up for about the first hour of the day. And so you're basically getting a freebie, like a freebie sneak preview of the course. And also, last but not least, I traded at 16.6% P&L today for about $145 or something like that on 2 contracts. So remember, I'm keeping it to $1,000 or less in the account per day traded. So therefore, I'm definitely not going in with like 20, 30 contracts because that takes more than $1,000 to do that. So I'm trading in the mindset. I'm putting myself in the small account trader's shoes, and therefore I only traded 2 contracts today. I went short on the SPY, and then a little bit after the recording cut off this morning, I went short 1 contract on IWM. And I closed both of them out pretty quickly and, made $121 profit on SPY and $35 profit on IWM. In hindsight, if I had let both of those run even further, I could have made even more money. But remember, we're talking about small account traders. Therefore, you need to be pretty conservative. You need to, not try to go crazy with it and take the profits when you get the profits. So that's the mindset that I was putting myself in today. And let's take a look at how it went today. So here is today's trading, and I hope you enjoy it. Okay, so here we are. As I just said, it's Monday morning, and I'm going to show you exactly what I do and how I go about setting up my charts every morning and the first things that I look at. So before I even get into any of that, first, right off the bat, you might be seeing all of these indicators and going, whoa, what the hell is all that stuff? I don't understand any of this. If that is you, then just stop this video right now and watch the video that I made about all of the indicators that I use. I have a whole separate video that I'm going to make, which is going to go fairly in-depth into what all of these indicators are. So if you're looking at this MACD and you don't understand what that is, go watch the other video, the indicators video, because that's kind of a prerequisite to understanding what I'm talking about. There will be a lot of times today where I'll say, well, see this crossover on the MACD, or see the alligators, or the RSI, or any other number of indicators that I might talk about. And in order to understand what that means, you need to watch the other video. So if you don't already understand what these indicators are here, go watch that video and then come back, and then it will be a lot easier to understand everything. So the first thing I'm going to do is I'm just going to remove all of these studies. I'm going to remove all of the studies on each one of these sides here, because we want a really clean chart. When I'm looking at trying to make my pre-market analysis of where we're at in terms of the daily and then the pre-market, I need to make sure that I have a real clean chart. So I've taken all of my indicators off. I'm also going to remove any of these old drawings that I've made. So I'm just going to go ahead and remove all of these drawings. I'm going to do the same thing. I've got a meta loaded up on the right. I've got the triple Q loaded up on the left. I'm going to do the same thing over here. Remove old drawings. Yes, I want to remove those old drawings. And so the first thing that we want to do is I'm just going to start with the SPY and the triple Q. And I want to show you one thing. The SPY and the triple Q usually move in concert with each other, meaning their look on a chart, at least on a daily basis, will usually be very, very similar. And that's what we see right here when we look at these two charts. So, sorry, I'm canceling these alerts out so that we can just have everything completely clean here with nothing, no distractions. So, take a look at these two charts. They look very similar, don't they? I mean, they're not exact. Like the Q's is a little bit more stretched out in this plateau phase, whereas the SPY comes up fairly dramatically and then falls really dramatically. But basically, both of these charts almost always have a very similar look to them. And so you can reasonably say that if one thing is happening on the SPY, it's a similar thing is probably happening on the triple Q. Now, of course, that's not always the case, but more often than not, that's the case. And one other thing is that more often than not, whatever is happening with the SPY and the triple Q, for the most part, will be happening with most tickers, at least big tickers. So like the Mag 7 names and your other, really large names like, Walmart or something like that. It's usually a case where most things are either up or down on the day as the day unfolds. And of course, you'll get those outliers where there'll be a day where everything is red and then you've just got some weird random ticker that's having a great day, or vice versa. If everything's green, you'll have that one ticker that's having a terrible day. That always happens. But for the most part, when you're looking at the market as a whole, most days, most things are either up or down on the day. And so what we're trying to do is that's a trend there. That means that, you've got a trend happening. You're rising or you're falling. And that's precisely what I'm trying to do, is I'm trying to identify a trend, and then I'm trying to jump in on the trend and ride that trend while I have the strength of the trend still working in my favor. Because no trend ever lasts forever. Maybe the trend will last like 15 minutes, maybe it'll last all day long. But, whether it's a few minutes or whether it's all day or even multiple days, like in the last couple of weeks, SPY and the triple Q have been trading down. You can see that right here in this action. This is the daily chart. So obviously for the last few weeks, we've been trading straight down on the SPY and the triple Q. that trend is not going to last forever. Now, does that mean that I'm immediately going to jump in and go short this morning because it's been trending down? No, it doesn't mean that. And I'll explain, everything as we go. But basically what you want to do is first thing in the morning, you want to pull up your charts, and then I'm going to look at what's been the most recent action. See, I could go all the way over here back to June of last year, but what happened in June of last year makes no difference to us right now. What happened, on Friday and Thursday and Wednesday of last week, that does actually make a difference to us. So when we're talking about our daily levels, setting our daily levels, we want to look at what's been the most recent touches. You want to see where price is most recently touched, and you want to get a valid level. Now, for the SPY, that is right around here, about 644.6, because as you can see, we've got price touching there 2 different times. So I'm going to go ahead and create this alert. Create an alert right here. What that means is that if and when price gets up above this 644.61 level, it's going to trigger my alert. Now, as far as my lower alert goes, there's nothing in recent memory that's anywhere close to this. So I'm just going to go ahead and put our lower level alert at the very low of the day on Friday. So this was the lowest point last Friday. So I'm going to set this to at or below. We're going to hit create. And now we've got our daily upper and lower levels. Now what I'm going to do is I'm going to change this to the minute chart. And then on the minute chart, when I compress this view, you should be able to see where those alerts were set. So just got it. You can make these views as wide or as narrow as you want. I like to make them kind of like a medium compression. So to the point where you can kind of see the action, you can see the actual movement, but it doesn't look like it's too dramatic. Because like if you squashed it down like I did when I first changed over to this screen, everything always just kind of looks like it's flat and you don't see any real movement happening. But if you go like this and really dramatically expand it, every single movement looks even more dramatic than it probably is. So you want to get it to kind of that medium level where you can see the movement, but at the same time, it's not super dramatic, right? Okay, so now what we're going to do is now we're looking at this is the over the weekend action. All of this gray area here, this is all of the weekend, right? So post-market on Friday over here, pre-market today right over here. So what I'm trying to do is I'm trying to look at the recent lows and highs in the pre-market to give us kind of a inner level. The daily level is going to be our outer level. Now I'm trying to get an inner level as to the upper and lower areas that I'm trying to look at as far as price. And as you can see, right around here, right around this 636.61, this is a place where price has touched right around here a lot. So I'm going to go ahead and create my alert. We're going to go below. So if price falls below this alert, it's going to trigger. And then if price goes above this alert right here, this is going to also trigger. Right? So now we've got our levels that we're watching right when the market opens up. I'm going to do the same thing on the triple Q just to, show you it's like the process works exactly the same way no matter what actual ticker you're talking about. You want to do the same thing. Now over here, it's a little bit different. Like my daily, it's similar, but it's different. And as far as my upper level goes, I'm going to get right here, about 591.35. Let's create this alert at or above. So if and when price breaks up above this alert, that's telling me that we have broken a relatively important resistance area, because since we are below this line right now, this is resistance for us. If we're looking for price to come up above, we are being resisted at this level, right? So if we break through that, it means that you have broken a important resistance level at that point. Now I'm going to do the same thing going kind of at the bottom of Friday's action. We're going to make another alert, except this time we're going below. So at or below. Let's make our alert. So there we've got one at 561 on the low end, 591 on the high end. That's a really, really wide margin, but we're going to make our inner levels here in a second as we look at this pre-market. So all of this gray, this is what happened right after the close on Friday. That's where price was. This is where price is right now. So you see we're up above where we were at right at the closing on Friday. So that could be potentially a bullish sign if we don't immediately give up all of those pre-market gains right when the market opens up, which is definitely possible. But I'm going to set my alert below this level here. Now, remember, you don't need to be exact on these levels. You just need to get an approximation. Like you can just eyeball it and you can just see with your eyes that we're touching this level a lot with our price. So that's all you need to do. You don't need to be like surgical with it. You just eyeball it, use your best guess as to what you're seeing. I'm going to set my alert at or above right here. So today, since this is our first day, I'm really just going to focus on looking at the SPY and the triple Q, because as a beginning trader, that's really your best bet, is to just look at the SPY and look at the triple Q. You could trade individual tickers and have success doing that, but I always tell beginners or people with not a lot of money in the account, just stick to the SPY or the triple Q. Those are going to be your best bets as far as being able to get kind of like a more easy to identify price action, and it's not quite so volatile in the way that it moves. A lot of individual tickers have a very, very volatile pattern of movement. So that means you'll get really, really wild up and down swings, and it can be very scary and kind of like shake you out if you're not sure exactly what you're looking at. But with the SPY and with the Qs, it's almost always a lot more controlled in the fact that, yes, there's going to be big red and green candles, but as a whole, the movement is a little bit more slow and steady versus, like a ticker like AMD or MU, which can have really, really wild up and down swings. Okay, so now what I'm going to do is I'm going to add my study set. I'm going to add the study set that I most usually use. You can see I've got a ton of different study sets that I've created for myself. And I do look at all of these at some point or another under specific circumstances. But the one that I look at the most is this one called Alligator. And so that's got the 200 EMA right here, the Alligator indicator right here, kind of this blue, red, and green set of lines here. You've got your high and low of the day, which is that gold line. And then see, if you want to know exactly what anything is, you just hover over it and hit Command or Control click, and then it'll tell you exactly what it is. And then right here, this kind of purplish line, we've got our standard deviation channel. So the middle part of the standard deviation is kind of like where the sort of like the average. This is like where the average price would be. And then up here, we're at 2 standard deviation above average price. And down here, we're at 2 standard deviation below. Now, I use this as a kind of way to judge when something might bounce off of a level or, possible reversal points. But that doesn't always necessarily mean that that's what's going to happen when price does bump up against that point. Okay, so you heard that bell. We just opened up, so we are live today. And I'm not going to do anything immediately, especially on Monday. The worst thing you want to do is jump in at the first few minutes on a Monday. That's always a bad idea because there's a lot of stuff that's getting settled from over the weekend, like automatic orders will be getting triggered. So if somebody set an automatic stop order in any one direction and we've gapped up or down really hard over the evening, or in this case the weekend, which is even more unpredictable since there's 2 days rather than one, then a lot of orders will automatically set off immediately right at the beginning of the day. And so we want to kind of like let all of those orders clear and let all of that price action settle itself out a little bit before we jump in on anything. You know, I mean, at least 5 minutes. Normally I like to wait like around 10 minutes before I get into anything. But definitely let yourself wait at least 5 minutes on a Monday. So we're just watching the screens now. That's all we're doing. We're just sitting back watching. I'm going to go ahead and put my alligator indicators over here on this chart. So we're going to load study set alligator. So now you can see the same set of indicators is on each chart. You don't have to have the same indicators on each chart. You know, if I wanted to put completely different set of indicators over on this chart, I could do, you know, if I want to put up my Bollinger Bands, now you can see this looks completely different. It's got a whole different set of stuff over here. So you can do it however you want. But usually what I do is I have my alligators on both of my charts. Now this is my one external monitor. I've got a second external monitor, but I find that although you can put as many charts as you want up on any monitor, like for example, if I wanted to have 16 tiny charts on this monitor, I could have, you know, 4 rows of 4 small charts going across there. I could do that, but that would be absolutely crazy in my opinion because I wouldn't be able to focus on anything. So the key is really to just get a view where you can actually focus on everything. And with all of this stuff on my charts right here, I'm able to focus and pay attention to what I'm looking at. And I've got indicators that give me good information and information that I can use to make my decision without overloading me with visual information. If you get overloaded with visual information, then you're going to be just that, simply that, overloaded. That's the word. You don't want to get overloaded with information. You want to take just as much information as you need to make a really informed decision without having so much information that you have no idea what to look at. And so, in my opinion, this setup right here works the best for me. I've experimented with hundreds of different combinations of indicators by this point in my career, and I just always end up coming back to this set of indicators right here as being my main go-to indicators. So now what I'm paying attention to, since we're starting to fall here, I'm going to zoom in a little bit more. We're getting close to the 200 EMA. And if any of you have ever watched any of my other YouTube videos or you've read my book already, you know that this is incredibly important. The single most important indicator for me on any chart is this 200 EMA. I have this on every single chart all the time. And it's always a really, really telling level. Wherever the 200 may be, it's a telling level, because if price comes and slices below this 200 EMA with any level of conviction and then stays there for a few minutes, then I will be a lot more I'll be a lot more confident that I can go short and take a short position today. But if we come down here and we bounce off of this 200 EMA and this ends up acting as a support level, and then we bounce back up and rise up, then at that point, I would be a lot more comfortable going long on a position. As it's looking right now, obviously we've sliced below the 200 EMA, but you never want to jump in immediately. The second that you see something happen, you want to give it a minute. You want to give it at least a couple of minutes to make sure that it's actually a legitimate move that's going to have some strength. Because there's fake outs that happen all the time in the market. You'll constantly see something and you go, okay, that means that, this is going to happen. And then you realize that you're just getting faked out, basically. So that's what we do not want to happen. We don't want to get faked out. And in order to not get faked out, and since we're still only 6 minutes into the day, I'm still waiting. I need to see what happens when price comes back up and interacts with this level once again. It might just slice right through it, and then this will end up being, the intraday lows right here. Or might come back up, hit it, bounce off again and fall. We'll make a new low, and at that point, I would absolutely be comfortable going short, but we're still not sure yet. Got to give it a couple more minutes just to see. But what I am going to do is I'm going to go and load up an option that I might possibly trade on SPY if I do decide to go short. So what I'm looking at is I never trade the same day expiration. I always trade at least the following day, sometimes more. Sometimes I'll give myself 2 or 3 days. For right now, I'm looking at tomorrow's expiration. So that would be April 1st, an April 1st expiration. So let's see, on SPY, we're going to look at the price on SPY for a expiration of tomorrow. We're looking at 638 is about, right now, that's about 570. And that's too much money because remember, I'm only dealing with $1,000 right now. So I do not want to put in 50% of my total amount that I could spend on one contract. It's just too risky. That's just too much risk. So what I would be forced to do is go a little bit further outside of the money. So something like a 633 for 369. That would be the sort of thing that I would get, right? So you want to make sure that you can actually, afford what you're going to buy, and you don't want to put in all of your capital on one play, because if you're wrong, then you've got one shot basically. So that's one of the limitations to trading with a smaller account, is that you just simply have less chances to get it right. You have to be right the first time. You don't have 30 or 40 different contracts that you could trade and try and get it right. You've got to be right the first time. But it's looking like, as you can see here, we came up, we bounced off, we're coming back down. I'm going to wait until we see price come up one more time. I'm trying to give it one more chance. And if we try to come up and we reverse and can't do it, then I'm going to go in short. So it's sort of like, here's strike one, here's strike two. I'm just trying to give it one more strike to just make sure that it is in fact weak and that this was not a little fake out and then we're suddenly going to go to the upside. So what I'm doing is I'm paying really close attention to this candle right here, and I'm going to go ahead and get in. So I got in right there with my one contract. Now this is going to be the one contract that I trade today. So remember, when you're dealing with a smaller account, you only have, one or maybe two chances to get it right, because you certainly don't want to, put in all of your capital on one trade. And you don't want to put in like 80% of your entire amount of capital on your one trade. But I just got in and I got a pretty nice fill. Got filled at 389 and now we're at 407. So already in about a minute, I've made nearly 20 bucks now. And it's looking like everything is falling. So I'm just going to ride this. I'm going to ride this as it goes down. This is exactly what you want to do. You want to establish the existence of a real trend, wait until you see a confirmation of the trend, and then ride it and make your money. That's what you want to do. Now, this is exactly what I do every single day. It's just usually on normal days, I'm playing with a lot more size. So I would do exactly what I just did right here, but I'd be doing it with, 10 or 20 or even 30 contracts rather than just one. So as I said before, it becomes a little bit more dangerous when you're only trading, one or two contracts, because you only have one or two chances to get it right, as opposed to having a lot of chances to get it right when you're dealing with a lot of contracts. But this is looking good for me right now. And as I look, right now I'm up about 50 bucks on the day. So, right there, that's already a good sign. Now, obviously, we're going to have these little moments where we come back up. Like, you've got these little retracement moments. Even when the bigger move is down, you're always going to have those little moves like right here, which are going to be, it's going to retrace a little bit. So what I am predicting will happen, I'm not thinking that, suddenly it's just that's it and we're going to turn right around and like rip higher. Of course, that could happen because anything can happen at any moment. But what I'm predicting will happen is I'm predicting we'll see a little bit more of this type of thing followed by this type of thing. This type of thing followed by a little retracement, and then probably more big drops, and then more little retracements, and then more big drops, and more little retracements. And what I want to do is I just want to make sure that I time my exits so that I want to maximize the amount of profit that I'm making off of this one contract right here. I don't want to leave money on the table, but at the same time, I don't want to hold it any longer than I need to hold it if I think that it has legitimately reversed on me, and then that's the end of the trend. So you're always dealing with two things when you're talking about trend trading. First thing, of course, is you want to maximize the move of the trend that you're getting. That's number one. The second thing is you want to minimize the loss if and when the trend goes against you. Because inevitably, with every single trend, there's a certain moment when it's over. No trend lasts forever. So you could be in, riding the trend, doing good, making money. At some point, that trend is over. So you're always riding that tightrope of saying, okay, how much can I push this? Like, how much can I ride this trend, and when will the trend actually be over? And so that's where I'm at right now. I'm just managing. I'm managing this trend, basically. And this is where the concept of fear comes in, because a lot of people will get scared right here. They'll see like I'm in short, so I want the price to fall. A lot of people, if they get in short, they see like one or two green candles and they go, that's it, I'm out. They can't stand to see like one single candle going against them. And if this is you, you should stop thinking this way because it's not a logical way to think. What you want to do is you want to think about where's the logical place that I should actually kind of get scared and think about, stopping out my position. The logical place is somewhere up here, like somewhere between these candles right here and the 200 EMA. So you could even make like a zone. You can pull up a little box icon. So the logical place where you would start to get a little bit afraid is inside this box right here. So right up here, of course you don't want to see this. If you're going short, you don't want to see any green at all. You want to just see solid red across the board. But this is not a place to get scared yet, or this is not a place to think about closing your position yet. The place where you should start maybe thinking about closing out the position is when we get up here, if we do in fact retrace and get back up to that point. So as of right now, I'm just hanging out, watching the trade, letting the trade work. I'm still making money on this trade right now. So we just had a nice big push to the downside. Once again, I'm at nearly $60 a profit. If I had stopped out right here because I got scared of those. Okay, so we're back. I hope you enjoyed that little sneak peek of what my small account day trading options course is going to be like. I'm gonna do this one next week, so hopefully it'll be available within a month from now. Just depends on how quickly I'm able to get it edited once I'm finished making it. But yeah, that's what you can expect coming soon. All right, so that's it for today. Hope you all had a good day. Take care, everybody. See you soon.